Something big is happening in the UK property market right now. For years, house prices followed a predictable pattern. But in 2025, we're seeing that pattern shift in an unexpected way. As a business, we've spent the last decade tracking property trends across every corner of Britain. And what we're seeing now is unlike anything in recent memory. And if you understand the shifts that are happening right now, you can get ahead of the curve, whether you're an investor or just thinking about getting on the property ladder. So in this video, I'm going to break it all down. How the UK property landscape has been transformed, a clear map that explains exactly what's happening, and what these changes mean for anyone looking to invest in property this year. But first, what exactly has happened to turn the UK property map upside down? Well, to understand where we are today, we need to look at how we got here. For years, London has been the centre of the UK property market. It always bounced back the fastest after downturns. It always commanded the highest prices. And for investors, it was the safest bet because the demand was always there. So when the market took a hit in 2008, people assumed history would repeat itself. And at first, it did. London recovered quickly, and as always, the southeast then followed. Prices surged, and it seemed like the same old pattern playing out again. But then something changed. The gap between London and the rest of the country stretched to a historic extreme. For the first time, even investors with particularly deep pockets started asking, is this actually sustainable? Affordability was maxed out. Renters and home buyers were being priced to the brink. And London's growth hit a ceiling. Not because demand disappeared, but because people simply couldn't afford to keep pushing prices up. And just as this pressure was building, something happened that flipped the market on its head. The pandemic. A not so fun time that we all remember. With remote work taking over, people started questioning everything. Why pay sky-high rents in the city when I could have a garden, an office, and twice the space for half the price elsewhere? And so they left. Not just to the commuter belt, but way beyond it. Coastal towns, sleepy villages, rural areas that had never been on the radar before. So property prices in these places started rocketing. And for a while, it looked like a complete reset of the UK property market. City centres were struggling, while areas that had been investment no-go zones were suddenly seeing double-digit growth. But that brings us to now, where we're starting to find out that shift was never built to last. The race for space was driven by temporary factors, low interest rates, lockdowns, and a belief that remote work would take over forever. But look around now. The demand for city living is on the rise again, and those once hot rural areas are cooling down fast. So with all of these factors in place, we're seeing the market rebalancing right now. But what does this rebalancing actually look like on the ground? Well, here's a map to help explain what's going on. What you're looking at is the percentage of homes that gained value in 2024, broken down by region. At first glance, you'd expect a fairly even spread. After all, the entire UK faces the same interest rates, the same inflation, and the same economic conditions, right? But that is not what we're seeing at all. Look at the northeast. A staggering 68% of properties gained value last year. Now move over to the northwest. 63% of homes saw price increases there too. So far, it makes sense. The north has been growing steadily for years. But now slide your eyes down to the southeast. Just 35% of properties increased in value. And if we flip the data to look at price drops, the pattern is just as stark. In the east of England, 43% of homes lost value in 2024. Meanwhile, in the northeast, only 19% saw declines. Now, obviously, we can't cover every location in this video, but if you want to know which areas are our hotspots that we're targeting for ourselves and our clients this year, you can download our full list using the link in the description. Anyway, for as long as most people can remember, the rule was simple. Sure, you can buy in the north if you want higher rental returns, but if you want growth, buy in the south. But what this map shows is that the story has fundamentally changed. The north isn't just catching up for growth, it's outperforming the south by margins we've never seen before. And that raises one big question. Why? Well, a lot of it is the affordability ceiling I mentioned earlier. Prices in the south have simply hit a level where further growth just isn't sustainable without significant wage increases. The north to south price ratio has stretched to the maximum, and now it's snapping back to the norm. But there's more to this story, because while London was busy pricing itself out of reach, the north was transforming. Look at Manchester, Liverpool, Leeds, Newcastle. Cities that 10 or 15 years ago weren't even in the conversation for most property investors. Today, these places have seen massive regeneration projects, huge improvements in transport links, and most importantly, a surge in new jobs. especially in tech, finance, and creative industries. A decade ago, a young professional wouldn't have thought twice. They'd have moved to London. But today, they're choosing these northern hubs instead and bringing their spending power with them. And for investors, not only are you looking at better growth prospects in the north, you're also getting significantly better yields, often double what you'd see in London. It's a double win that's becoming impossible to ignore. Now, this is not a temporary blip. This rebalancing has been brewing for years. And because it took so long to reach this tipping point, it's not going to suddenly reverse. The momentum behind this shift is too strong. So what this means for you is simple. You need to get in the mindset of investing where the returns will be best, not wherever feels the most comfortable or familiar. Now, there's a second major trend that our map reveals, and it's equally important for anyone looking to invest in 2025. Remember that pandemic race for space I mentioned earlier? Well, that story is now coming full circle in a way that not many people predicted. Let me show you another view of our map, and this time we're looking at where values are falling the fastest. And what do we see? Well, the places that boomed the most during the pandemic are now cooling down the fastest. Look at Evesham in the West Midlands, for example. During the pandemic, it saw property prices skyrocket. People were desperate for the countryside lifestyle, the extra space, and the gardens. But look at it now. According to land registry data, values have been steadily declining since late 2022. Same story in Broadstairs in Kent, a beautiful coastal town that became the poster child for pandemic migration. Properties there were being snapped up, often well above asking price. Today, it's among the areas with the highest percentage of properties losing value. What's happening here isn't just a few places adjusting. It's a pattern. During the pandemic, we convinced ourselves that the future of work had changed forever. The offices were obsolete and city centres would become ghost towns. Companies were declaring that they'd never return to traditional workplaces, and estate agents were proclaiming the death of the commuter belt. Yes, hybrid work is here to stay, but people missed city life. The energy, the opportunities that don't exist when you're working alone in a spare bedroom. And employers realised that while flexibility is great, there's still massive value in bringing teams together in person, at least some of the time. So now we're seeing a correction. Not a complete reversal, but a market settling into a new middle ground reality. City centres are gaining momentum again. Commuter towns are seeing renewed demand. And those far off locations that surged are coming back down to earth. So what does this all mean for you as an investor in 2025? Well, a lot of investors see falling prices in rural or coastal towns and think, great, a bargain. But in reality, many of these places were never supposed to be that expensive in the first place. They're not undervalued now, they were overvalued during a temporary surge. So don't be tempted by those bargain prices in areas that boomed during the pandemic. Places like Evesham and Broadstairs aren't suddenly great value. They're just returning to what they should have been all along. Instead, focus on places with staying power. Areas where people need to live, not just where they fancied a change during lockdown. Because at the end of the day, the rule of property hasn't changed. People follow jobs, infrastructure, and opportunity. And if you follow that, you'll know exactly where to invest next. But here's the other thing. You don't need to find that one runaway hotspot. This isn't just about one or two booming cities. It's a broad shift happening across entire regions. It's not just a short-term cycle, it's a fundamental restructuring of the UK property market. So if you invest based on where the demand is heading, not where it used to be, you'll end up on the right side of it. So where exactly is this happening? We've talked a lot about regions, but which cities are set to be the highest performers in 2025? Well, check out this video next to find out.